So, I'm Samantha Russell, the Chief Evangelist here at FMG. I help facilitate most of our webinars and love talking with all of you, hearing what is going on in your lives and how we can help you market and grow organically using great marketing. Susan, you're up next.
I'm up next. Hi, I'm Susan Theater. I'm the Chief Marketing Officer at FMG, and Sam and I love doing these, and I look forward every time to the chat and just hearing your questions, getting your feedback. And this one, we're super excited because we are not doing most of the talking. We have a
Doing the
guest
interviewing.
star who is like A++. You guys are really going to enjoy this. So without any more talking from me, let's get on to Clint.
Hi, Clint.
Yeah.
Introduce
Susan,
yourself. Tell us a
same.
little bit about yourself.
Yeah, thanks for having me. This is like the most unique webinar I've ever done because I'm technically a lawyer, CPA, tax person, and usually any webinar doesn't start off with like that sounds like a real podcast. So this is like a real podcast I would listen to. So I'm very excited now, and I feel like I'm
We're
not
not
sure if I
formal
can,
here, so you
yeah,
can
hopefully
you
No,
can
hopefully I can
yeah, we
keep
didn't do
up.
the 5-second disclosure.
yeah. No.
Exactly. Yeah. So yeah, my name is Clint Costa. I am the senior wealth strategist at a firm called Corio. We're a national RIA firm. We're an FMG subscriber, and I work with all of our advisors across the country, bolting on to help them with my experience, which is 15 years practicing law and also tax law and practicing trust and estate law and kind of doing all of the tax and estate work for our ultra high net worth clients. And again, really bolt on and assist our advisors across the firm with that.
Amazing. Well, thank you for taking time to join us. So, to give everybody a lay of the land, what we thought we would do, obviously, here at FMG, we are your partner for all things marketing and communications. So, we are going to start by talking about the bill and what's in it and what you need to know high level. And then at the end, or not the very end, but about 60% of the way through, Susan and I are going to show you some of the resources that we have already created that are available to you. Some of them we're just giving to you for being here. So even if you don't currently use FMG, you're going to walk away with an amazing toolkit that you can use to talk about this. Go FMG marketing team. Thank you for putting that together. But for everyone else, we'll show you where in the FMG dashboard that there's even more resources and tools that you can use. So that's the structure. So stick around so that you get to, both learn about the bill and then how you can use it in your marketing and communications.
Yep. So I think we'll, Sam and I will monitor the chat and we'll strategically interject/interrupt Clint if we see like thematic questions going on. But otherwise, we're going to hand it over to you, Clint, to tell us what we need to know. And Sam and I are as interested as everybody on this call.
All right, sounds good. You're giving a trained lawyer freedom to say whatever he wants. So I don't know if that's like smart. Well, I'll just keep going. There's no one here with an actual hook. You might need to send somebody to my house with an actual hook to pull me away if I don't hear no, tell me to shut up if we don't. Yeah, so the ABBA, right? So where do we even start with that, right? I'm guessing if for the folks who are on this webinar, you've probably already been looking for information. You've probably already been very confused by outdated chat GPT responses to your questions because it just doesn't seem like it's super updated up to July of 20 of this year, which is what we where we're at. And so that's why we're here to help. So where I start is a lot of context, right? And I think whenever there's a new tax bill, and this was true when the TCJA came out in 2017, the Tax Cuts and Jobs Act, it's also true now. It's been true in the interim. I don't know if anyone remembers the movie The Great Outdoors with John Candy and Dan
Yes.
Aykroyd. Trying to think through and learn all of these tax provisions is kind of like trying to eat the old 96er. I don't know if that's too dated of a
You got
reference.
you got one thumbs up.
Okay, I got one. We'll see. Yeah. The context is really important, I think, in there we go, we got more. In the world of being financial advisors, right? And continuing to try to bring a tax focus and help our clients for a variety of reasons. Okay, so first, where do I go with that? First, context. Where are we? I don't know if we've really seen as much change in the tax world as we've seen in the last 8 years. So I'm going to go back to the TCJA in 2017, which was a massive shift in so many areas of the tax code. Secure 1.0, probably an absolute favorite of everybody in this on this, call has had to talk about the 10-year rule, the loss of the stretch IRA, all of those issues that came out of Secure. The fact that then Secure, the IRS took a long time to come up with the regulations. We had then all the COVID stuff. We kind of forget the CARES Act, the ARPA. Then we had the Inflation Reduction Act, which actually was one of the first things I wrote about when I came into Choreo. Then Secure 2.0. Just kind of general confusion around the sunset. We were just talking about that. Everyone was thinking about writing about the sunset. And then now we finally have the OB3 or the ABA or whatever we're going to call it. I think at the same time, the tax advisory landscape has changed very significantly. So at Coreo, we're deeply interested. Our roots, our heritage is in the wealth management groups of CPA firms. So we're very tied into the CPA world. And the CPA world is changing radically and rapidly over the last really 4 years. So a lot of folks who are involved in that world look back to 2021 when a firm called Citrin Cooperman took the first kind of big private equity investment that has since actually been unwrapped. It worked. It did what they thought it would do, and so it's continuing very significantly. So what you have is a lot of private equity investment coming into the CPA world. It's changing the nature of how people get their tax work done, get their tax advice. A lot of that work really is shifting. What we see at Coreo, a lot of that is shifting to our advisors who are being asked to do more, know more, right? You see the Kitsis Tech Map. There's 9 tax-focused technologies in the fintech world right now. There's probably many more to come. And so, that plus a lot of CPA firms really ditching 1040 practice. Like if you're not tied to, I'm sure I'm not saying anything that the advisors on this call haven't felt in trying to help their clients. Like who's going to even do the 1040? A lot of CPA firms, if you're not tied to a business or some larger thing, aren't super interested in just doing one-off 1040s. It doesn't work for their cost structure and it's not their ideal
So,
client anymore.
Clint,
Yeah,
for our audience, what would you say are I don't know, I'll throw out a number 5, but like the top 3, 5, whatever you have off the top of your head, things that you've seen in this OBV, I like the OB3 or whatever it is, that are going to impact the majority of clients. What's most relevant for everybody to be thinking about, and maybe if we start talking about that, I think we'll probably get some other questions digging into
sure.
those.
Yeah, so I think if we're going to go with the top 5 or think about how the provisions come down, where I go is first of all the rates. So if you look at the foundational pieces of the ABA of the OB3, the big things that the big pieces that drove most of the cost were the rates. So keeping the TCJA rates. So why is that important? Being proactive about tax bracket management, right? I took a look back. The 24% bracket, that's sort of right, the gold standards, like where everybody wants to jam as much as they can into that 24% marginal rate bracket. In 2018, that bracket ended at $315,000 of income for a married couple. In 2024, it ends at $384,000. So that means that there's $69,000 approximately of additional income that you can get taxed that just by virtue of the way that the tax brackets inflation adjust. Um, and so for clients, right, and that's kind of where I was going, like for financial advisors, picking your lane in tax advice, like where do you want to go with this? Do you want to just be kind of a helpful, like, hey, did you think of this? Did you think of that? Or do you want to be kind of deep in the weeds of helping your clients, of projecting and of really helping them kind of work through tax planning ideas, especially if most of their wealth is tied up in investment assets where that's really our domain, right? As financial advisors. And a lot of CPAs don't want to do it. So are we doing like multi-year tax projections, taking advantage like, oh, you're going to have a great year in your business next year. Everything's kind of rolling. You kind of hit your stride mid-year, and so we see a little bit of that in your 2025, but 26 you're gonna blow it out of the water. Okay, amazing. Maybe we need to really think about stuffing as much income into that 24% bracket, finding places we're doing Roth conversions or we're doing something else to do that.
That's interesting too, that you mentioned specifically, like if, oh, you did a good year in your business, because one of the questions that was pre-submitted that came up over and over again was, are there certain opportunities we should be thinking about communicating to business owner clients? So would
Yeah.
you say that that's definitely one of them?
I think being involved, yeah. So clients who have businesses, right? Sometimes there's this viewpoint of like, I'm gonna be a little bit hands off. The CPA has it, they're figuring it out. CPAs are super busy. Especially if the business isn't taking advantage. I mean, there's a lot of great CPAs out there, but if depending on the firm, if the CPA or sorry, if the business is not large enough to like buy services from every arm of that CPA firm, they might just be getting compliance and they might have a CPA who's very, very busy and maybe not paying attention to a lot of these things, either for the maybe for the business, it's probably more likely, but for sure for the ownership. And so being aware of what's happening in the business is really important. And I'll go to that. The business focused provisions, I would say in general, are important. I think it's much harder in our world as a financial in the wealth management financial advisory space, even if we're very tax focused. I think it's hard for us to make a big impact. I think where we make a bigger impact with the business provision. So that's going to be your 199 cap A, flow through qualified business income deduction, the new bonus depreciation, which is really it's what we had and went away and now it's back. So 100% bonus. So client's going to make a capital expenditure, they're going to get 100% cost recovery in the first year. The larger 179, which is a very esoteric. You really have to be kind of, from my perspective, even with my background, like I'd have to look it up for 3 hours. You have to be a CPA and in this world to know, like, well, what's bonus, what's 179? So it's enough to know the 179 is a little bit different, and there's larger exemptions there. It gives business owners still that ability to take more depreciation. Um, the and then the sorry the on the business, some of the other things that are very business focused. So business debt, if you're capitalizing your business with debt and there are limitations on the interest deductions you're allowed to have. If you have excess losses, right, that could be really important for a pass-through, an S corp or a partnership, an owner who has losses, like, oh great, I'm going to take all these losses. Well, there's limitations on that. So those are really important, and I think from my perspective those are areas where you really have to coordinate with the CPA. You have to be in with the CPA talking about how are these things we're projecting out. We think we're going to have a loss. We're going to we're going to buy this huge piece of equipment. We're going to do something that's going to, be directly applicable and show up on the 1040. What opportunities does that provide us in the portfolio? Like, oh, this person also got in super early on NVIDIA. Like, could we possibly, take some gains, take some chips off the table? We've been wanting to diversify. We know we have this big loss coming, but we don't want to get way over our skis. All of those things are really important from that arise from the business.
I'm
Um,
gonna, I'm gonna
where I would,
pivot just a little, just
yeah,
I'm going to do the hook a little just so we get through all the topics because time's gonna
absolutely,
fly. We've got a
absolutely.
couple topics pre-submitted and then they're piling on in the chat about the changes or advice on donor advised funds in 2025 versus 2026. Another person just phrased it as charitable implications.
Yep.
Maybe talk a little bit about that.
I have notes for that. All right. So charitable. DAFs have not changed. So there's definitely some chatter around DAFs. They have not changed from what we know in the past. Here's maybe a little bit of the chatter. In the last couple of years, there was an effort, which I think is probably well dead. I haven't checked back into it, but I think it's well dead. There was an effort to further define what a DAF is. DAFs are kind of weird creatures in the code. Like you can't look at a particular code section really and say that's the DAF section. It's a little bit of a patchwork that makes a DAF a public charity, treated as a public charity. There was an effort to sort of define that in the IRS regulations, and what that was actually going to do was the big upshot and what we were all talking about, at least at Choreo, and what was coming out in the industry as the news was developing was like you couldn't manage a client's DAF account and manage their personal account. That was the proposal, which has never been put in place. So that's been on people's radar, like, oh, there's something with DAFs, there's weird stuff with DAFs. The second piece with DAFs is with charitable now, right? The big changes to charitable are first of all, which is kind of cool, for non-itemizers, we've gone back to having a a non-itemized below the line charitable deduction. So we had that when in the COVID era, there was, I think it was $600 that you could donate and deduct without itemizing your taxes, which most people kind of stopped itemizing after the state and local tax deduction got limited to 10,000. We now have that, but that has to be the only way you can take advantage of that is cash gifts to directly to public charities, not DAFs. So that may be out in the ether, and that really speaks to what this ABBA bill is all about. There are so many phase outs. There are so many little details. Why? Because they had to work within the reconciliation framework in Congress. Like it was in the news, we were following it as tax people. I was following it. All these little things. Another
Things
one is,
phase out. Does
yeah,
everything have a different phase out, or is there sort of a time at which all the phase outs go?
it's all different. So the deductions are kind of all over the board in terms of at what income levels they phase out. So going to do this off the top of my head. I think like the child tax credit now, right? We're at $2,200. That phase out starts at, I want to say it starts at 400 for a married couple. The phase out for tips, overtime, senior deduction, the new $6,000 senior deduction, those all happen at lower levels of AGI across different phase outs. The new SALT deduction happens from 500 to 600,000. There's also a difference in terms of the aggression of the phase out. So do you get like a couple $100,000 of income to experience the phase out? So even if you're above, you still get some or most of the benefit, or is it quickly go from you get all the benefit to you get none of the benefit? Those are details that have to just be addressed. And again, it kind of relates to that first point I was making, which is if you're a financial advisor, wealth manager, you're getting involved in taxes, you're offering tax advice to your clients and trying to help them navigate this world. Are you doing, is that part of what you're doing? And are you supported by the right processes and maybe people in terms of, bringing that like a multi-year, like we're going to find opportunities over a 10 years period because we're going to have a long-term relationship versus like, oh, okay, here's what your income was this year. Here's where we think it's going to go next year. Because a lot of these things, they do take time and you can find opportunities, especially if clients are going to maybe have low income years, they're going to retire, so on and so forth. Really quickly on charitable, what didn't change are some of the basic tools we had. So QCDs didn't change. I think they were inflation adjusted 2 bills ago or 1 bill ago. So QCDs continue to be qualified charitable deductions. Instead of the RMD coming out to the client who maybe doesn't need that income, they can fulfill their charitable desires with those RMDs. So that's the same. The rules for that are the same, public charities. Um, the the other one, in addition to the new non-itemized, so up to a thousand or 2,000 single or married filing jointly for people who make charitable gifts. The other one that's important there is the new half
I
a
was just
percent.
gonna,
Yeah, sorry,
Yeah, I was just gonna
Sam,
say
you
while
literally,
you're talking,
I
you're
was
going
just
to
gonna
it.
just pull up, I was just gonna pull
There
up
we
our
go.
blog as an outline. Like, so Clint, I think people are struggling because we're just talking. And so I think what might be helpful is if we can go through, you can either bring up the email or the blog has even more, but let's start with the email. So just to segue a little bit into FMG, we have written content to help advisors communicate both through blogs and emails and social posts some of the changes and the big impacts to their clients. And we broke it out into some of these categories. Maybe to help people, because it's such a big topic, maybe we can touch on each of these and you can we'll leave them up on the screen so people can both read and ask questions as you talk through it.
Sure.
Why don't we, let's see, Sam, which one should we start with? We got the
and I
tax
just
bracket.
wanted to point out to everybody who's asking
Oh,
about the
everybody,
toolkit.
yes. So everybody's like, can you share that document? So yes, we are going to share these. We wrote emails, we wrote the blog, and we wrote social posts, and we are going to share that with everyone on
This
this
is what you're
call.
gonna get. Yeah.
Maybe let's pivot just a little bit, just since we're seeing some feedback. Why don't we take them through this toolkit and how we're going to help you communicate.
And then we
And
can go
then
back to the
in the
questions. Yeah.
chat, why don't you guys give us questions on the topics that you're most interested in getting a little bit more detail on, and then we can have Clint opine on those.
That's perfect. So yeah, so everyone who's here today, you're going to get this toolkit. It's a PDF, but you'll see that everything is clickable. And within here, there's emails that you can use that give an overview that you can send to both your clients, your prospects, and any centers of influence that you work with, subject matter experts, anything like that. Then there's social posts, there's a blog, there's a podcast script, a video script, and a webinar. And you're able to download it all and use each of the pieces. So this is the PDF. And then when you click on any one of those pieces, it takes you to something like this. So here's the blog, here's the email, and you're able to copy and paste this into whatever email provider that you use. And you could obviously still edit it as well. But we've broken into like what are the main takeaways that that clients would want to know and that you would want to communicate to them. And so this is all given to you in that toolkit that we will be emailing out. So this one is the email that I'm going through, and it's all sourced at the bottom, by the way.
Yes. Here's one question in the chat. The verbiage for the SALT deduction mentions 40,000 under a married filing joint pretense, but says nothing for single married filing single. Tax laws typically imply in some way or another that a deduction is halved for single MFS. Is that the case for the new SALT cap?
No. Yeah, it's weird. That's a weird one. It's the same for single and married. And married.
Good question.
And that's a really important one, by the way, for everybody. If you have clients who are so like it's interesting, right? In Illinois, where I'm at in Chicago, we actually don't have, it's surprising to people, we actually don't have that high of a state income tax rate. We actually have a relatively low income tax rate. It's less than 5%. We have extremely high property taxes though. And so where people were, are excited in my world or locally is they get some of their, deduction back, and it's really a big theme of the ABA, which is the return of the itemized deduction for many people, right? So I'm thinking about two things. One, high state income taxes, so that's going to be your New Yorks, your Californias, or Massachusetts, and probably others I'm not thinking of. And also high property taxes, Illinois, New Jersey. There's other states that have that. When you take the ability to get to that $40,000 level of SALT deduction, then you add on the fact that maybe there's people who've taken higher interest mortgages in the last few years as rates have gone up, thinking that they would be able to refi, and they're just kind of hanging on. Obviously, for those folks who refinanced during COVID and they're sitting on their homes, which is a huge trend, that's not going to affect them as much. But we're in a world now where the itemized the world of people itemizing is coming back again. And
Yeah.
so what's really important to know about that SALT deduction, it's probably, I'm going to say it's maybe the most important piece of the ABA, is the how aggressively over that phase out range. If you make $499,999, that's your AGI, you get the full $40,000 deduction. As you go through that phase out range, you lose that deduction very quickly to $600,000 of income. So once you're at 600, you don't get it. You're back down to 10,000. And so people may have seen this. It's been termed the SALT torpedo, which sounds very ominous. But the idea is that as you go through that phase out range, because your income's increasing and your deductions are decreasing, like your SALT is coming down, the amount you're allowed to deduct, you're actually getting up to like a 46%, almost a 46% tax rate. So
Okay.
as we're planning doing income planning for clients, I talked about the bracket planning, like how much are you stuffing into that 24% bracket? Then you go up to 32. It really requires a multi-dimensional, right? We're playing four-dimensional
Well,
chess.
yeah. And I think one of the things you're hitting on is that there is so many details in this and the opportunity. So many people are asking, like, what are the opportunities? How do we communicate it? I think just even by virtue of if you send some of these communications as the advisor and you're saying there's a lot of moving parts and this is a great time for us to meet and to go over this and talk about how it's specifically going to apply to you and we're working on the background there. And for somebody who doesn't have an advisor who's proactively sending these types of communications, their friends talking about it, or if they're on your list as a prospect and they get it, what an amazing opportunity. So, Susan, I think it would be good now, since we're 30 minutes
Yeah.
in, just to talk a little bit about how we think about, right, when we're sending these emails.
Mhm.
Like we have it here, breaking down the one big beautiful bill act. That would be the subject line of this email. And when we're writing it, how it is really, really positioned to be able to be sent not just to your current clients, but to prospects and centers of influence, so that you can really use it as an
Yeah.
opportunity to grow.
Yeah, I think this is such a great opportunity to establish yourself as a, forward-thinking thought leader of your clients. They know something's happening, but I bet most of them have not really dug into it. So for you to break it down, everybody loves the word breaking down because I don't want to read something long. So we're getting some questions in the chat about like, what are we sending? So we are literally sending you the email that we wrote in a Word document that you can just copy and paste. And if you are an FMG customer, these are pieces that we wrote for our Do It For Me customers, which is our top package. So if you're interested, we'll put a poll up in a little bit. And if you're interested in learning more about it, you can raise your hand in the poll. We also have content beyond what we're including in this kit that is in our regular, library for all of our customers. And we will continue to write content. That's one of the things that I think is one of the best value propositions of FMG is we're
Yeah.
always writing content on topics that are timely, and this one is going to have legs for a long time. So
So this doesn't cost you anything, though, by the way, just
no,
because people are confused.
doesn't
This,
cost you.
everybody here is getting what you're seeing on my screen for free.
Yeah, so you'll just click on download now and you will have the copy of the email, the copy of the social post. You can copy and paste it. And if you are not on FMG, you can send it out in your email. You can post it on your social. You can add it to your website. We are giving it as a gift. And the webinar playbook, maybe look at the webinar playbook, because I think we've talked before about lead gen. And I mean, most people on this call, I think, are interested in growing and lead gen. We think webinars are one of the best ways to do that. And I think this topic is an amazing topic for a webinar. So if you click on the webinar playbook, we haven't just said, here's an idea. We've actually done everything from writing how you would tee it up to a CPA to invite them to maybe join you. It would be a great opportunity. We've included how to, set up the webinar. We've included even how to do Zoom. So sometimes people are like, well, I don't use Zoom. So we've included like how to do Zoom. And if you expect a lot of people, how to upgrade your Zoom. And then everything from the email to promote it, the social post to promote it. I mean, we really give you everything. And our whole philosophy, as you can tell, which sometimes doesn't work perfectly, because I think in this case, we probably would have done better to have some slides for you. So our bad. But for this, it can be something where you and a CPA in an organized format are talking through like leveraging our script. So if you keep going down, or maybe it was higher, but I've got an outline of the actual webinar so that you go through the topics in a very, coherent order. And you just hit on the things like the 5 changes to 529s, the changes to AMT, the changes to, what's this new child account thing. And you can hit on them very succinctly. And it's just a great opportunity for you to partner with a CPA. And maybe, Clint, you could tell the audience, everybody would love to partner with CPAs and get referrals, right? What is the best, like, we think this is a good idea, like a good topic to partner with a CPA. How would you recommend to advisors to approach, a potential CPA in their market that they don't have a relationship with? What's the best way to come at it sort of from a win-win, not seem like, it's all in it for me? Like how can they leverage this to build a relationship?
Yeah, it's a great question. It's something we really focus on a lot at Choreo. I think the bit from my perspective, the start is like, who have you worked with? Like, you must have like look through your book and figure out the top three CPAs that you think do a great job for your clients
That's a
and
great idea.
approach them with that, right? CPAs are awesome. I love them. I am one. I've never really practiced as one, but I did get the letters. Um, they're super busy. Like right now, one of the things, right, that's probably creating a little bit of a lag. You had July 4th when the bill was signed. The CPAs then had I mean, that's their vacation time, right? They have busy season. they're back in busy season now. They're going to be going all the way till the October 15th extension deadline with 9:15, 9:30, and 10:15 deadlines. So don't hit them now. But they're then gonna be focused on the ABA mid-October, late October, early November, pre-Thanksgiving. These are awesome times to think about tax planning for your clients and figure out the right approach. Maybe the CPA firm is, you're working on that with your clients, and then you're bringing in new prospects for them. See, again, CPAs are busy, like marketing time. They want to grow their practices. If you
Well,
can help them, that's amazing.
yeah. And I was going to say that is why one of the things we do have, just to maybe butter them up a little, we have this sharing our client brief on the One Big Beautiful Bill Act.
Mhm.
That, we're not just giving you, if when you're a part of FMG's Do It For Me program, we don't just give you content. So, right, we're giving you, by the way, again, this is all coming to everybody for free. But what I'm talking about now is this is our dashboard in FMG. And we have different subscription levels. And in our Do It For Me program, which you can see the label here, we regularly have communications that you can send to those CPAs, to the COIs that you're working with.
Actually, we will send them for you as
That's
long as
right.
the contacts are in your email. And when you're ready, Sam, I think it could be a good time because we're getting questions about our packages. It might be a good
Yeah.
time to put the poll up at some point.
Okay, yeah, Aubrey, why don't we put it up while I'm just talking about this? So if you're part of our Do It For Me program, that is part of what we do for you. Every single month, we would be sending out a calendar that looks like this. So you see Susan up here at the top. She explains what marketing we're going to be doing for you that month. And then you can hover over any of these and you can see it's broken down, color coded. Is it a social post we're sending out for you? Is it a blog this month for September? The blog on Tuesday is going to be breaking down the One Big Beautiful Act. And then there's an email that comes as a follow-up that you can send to clients, prospects, and centers of influence. And so we've got these already set up. You have a concierge that meets with you once a month, and you're able to say, yep, I love it. Let's send it all. Or, hey, I work with business owners. What should I specifically be sending to them? Or how can we, edit it for them? And then we have all these additional content pieces that are part of the calendar. And again, the name describes the program. We do it for you. It's the Do It For Me program. So yes, you can take obviously all the resources we're giving you just around the One Big Beautiful Bill. But as Susan mentioned, really this is going to be something you're going to want to be talking about for a while. You're going to want to continue to drip on people. And that is one of the massive values of our program is as breaking news hits, we will send it out for you. As time goes on and you're thinking about what am I continuing to drip on these prospects and clients, it's all included in this program.
Absolutely. Yeah. So our goal today was to be able to have an expert who could answer your questions, technical questions about the OB3, and then to tell you how we can help you capitalize on it with your clients and prospects. I will just say, I think lesson learned when we're talking about technical topics, we should have slides that help bring it to life. So our apologies for that. And it does seem like people are really interested in the resources to communicate, which is exactly what, we're here to do. In terms of some other questions that I got for taxes, I did see something about alternative minimum taxes and how that's different in 2025 versus
Yeah.
2026.
So, and real quick, I also saw someone I'm not seeing all the chat, but I saw someone mentioning, yeah, if you can find an enrolled agent, that is those are the diamonds in the rough. CPAs are awesome but sometimes they are a little more focused on business, just sort of depends on their practice. EAs are tremendous and that's a really hard designation to get. On the AMT, what the ABA did, the OB3, I don't know what I should call it. I keep thinking about the subreddit, the Tragiday subreddit. Like, what should we call this thing? Is it the One Big Beautiful Bill, the ABBA, or its technical name, which is an act to provide for reconciliation pursuant to Title II of House Concurrent Resolution 14?
Not that. Don't call it that.
I could call it that all day long. Here's what happened with the AMT. And again, it really relates back to this whole idea of bringing back itemized deductions, right? The AMT kind of doesn't play well with some itemized deductions, specifically SALT, because SALT comes back into the calculation for AMT And so to the extent people weren't deducting SALT, couldn't deduct SALT, state and local taxes, it really didn't play that much into the AMT. So what the TCJA did, the Trump tax cuts in 2017, um, increased the increased the exemption, which is the amount you get to subtract. And also just by operation of some of the other provisions, took away some of the what are called like the add backs or the preference items. So that's we haven't seen much AMT in the last like really 8 years. That's kind of pretty much continue under the bill. Um, What's happened though with that is two things. Again, the return of itemized deductions, specifically SALT, which is a preference item or it's really an add back. So that puts people like I've subtracted this from my income, but it comes back when you're calculating AMT. The other thing that the bill did is it said, okay, we've got these higher income thresholds for the phase out of how we basically do this. Um, we're going to bring those back to 2018. So they've been inflation adjusting for the last 6 years, and they're going to go back. I think that's a 26 issue. They're going to go back. And so one of the opportunities we're seeing is like if you're seeing issues for potential preference items, specifically clients who have incentive stock options, because the exercise of those is not a regular tax issue, but it is an AMT issue. So for people who are affected by that, and I know there's a lot of financial advisors that help their clients with those, this is actually a year like you might want to be talking to your clients about, hey, you have those ISOs. We're going to be kind of back in a world of AMT again next year. We might want to, hurry up and
Yeah.
exercise some of those.
I think one of the things that's really interesting, even just like if I'm a client, I know nothing, I'm giving everything to my advisor, I'm not paying that much attention, and then I see this list, right? It's like, doesn't matter if you are getting ready to retire, you're already retired, you have kids, you own a business, you're married, you're single, there's changes that affect you. And
Yeah.
so from a marketing opportunity and a communications opportunity, I see it as a gold mine as a marketer because whenever there's big changes like this, you can prove your worth by being somebody saying, I know your specific situation. I've dug into it. Here's what we're going to do in your situation. And getting these kinds of communications from your advisor makes you feel like, okay, they got my back. They know what they're doing. And I do think, sending this kind of stuff out and saying, maybe even at the top, if you know anybody that, um, is looking for guidance on what this means for them, feel free to forward this to them. That's such a great way to have a referable moment that, people can introduce you to their friends or family whose advisors are not talking to them about all these specifics.
I think the on that point, Sam, the 529 content, I find that to be so. I think, coming from a law background where we were general tax people and then moving into a financial advisory, like it's interesting the difference in the questions and the difference in the priorities of the clients. The 529 world is one that a lot of questions
Yeah.
arise, really both on like estate and gift, right?
Yeah.
But also like what can I do with this money? And we've had a succession now of a couple things make it more possible. Like in the bill now, we have a higher limit for K through 12 expenses, so you can do
Yep.
20 instead of 10.
And
There's
that starts in
also
26, right?
that is, I think yeah, I think that's right. I think that's right. See, even I have to like, I'd have to go back and check to be quite honest, but we're close enough. Um, the point being that when that comes in, right, it's going to be this year, we've got a few months now, or it's 26. Um, there's more stuff to do. We had the Secure 2.0, which gave us the ability to ultimately roll over the 529. So the 529 is becoming this financial vehicle that CPAs, EAs, I mean, maybe EAs, but like CPAs really aren't touching, right? As financial advisors, we're typically helping our clients, even if
Yeah.
we're managing those accounts, we're helping
Yeah.
them get them set up, create the budgets, create the savings plans, the financial plans to get those things funded, helping the clients understand like what does this mean? If you have
Is the
250
big
grand sitting there,
is
like
the,
what does this mean?
is the big change the K through 12 deduction or ability to
It's
contribute there? Or it also didn't it broaden the types of things that you
Yes.
could
yes.
expense?
Yes.
So it broadened that. So K through 12, like tuition was already allowed up to 10. So now we're up to 20, but it included other expenses in that. Yeah, exactly. So tutoring and books and supplies and those sorts of things, which like, I don't know, for my son's school, it seems like every kid's going to the
A
math
tutor.
gymnasium or the thing or the tutoring or whatever, right? Because we all want
Yeah,
our
no, I wish my kids are now a senior in college and out, but I would have used it for lots of tutoring. Like, does SAT tutoring count? Could it be any kind of
I
academic tutor?
think it is, and I think it includes. I thought it included like the standardized tests, like AP test
Like,
materials. I
I'm
thought
thinking,
that.
Sam, these are social posts, emails that we can write for FMG, which is,
Yeah.
just can you expense SAT tutoring, against your 529? Like, that's a header, which also works with chat, with all the AEO because we're framing it as a question, which
100%.
FYI, everybody on this audience, we are thinking very much about how we write our content so that it helps our customers be found in the answer engines, which is where people are asking these questions. Um, yes, we've got an expert on the call. He said ACT and SAT coursework is now eligible. So these are like changes that matter to people's lives. Like, these resonate way more than like
Yes. I was gonna say it's
married filing
tangible.
jointly. Yeah, it's way
And
more
this
Right.
one about the
tangible.
child savings account, I saw like a bunch of
Oh,
TikToks about this.
MABs. Oh, go ahead.
Oh, yeah, I
You
was
just
gonna
asked
say,
about
like, I
living
think
expenses.
anything that sounds like, oh wait, because you think of the hook and people will write like, did you know the government will give you $1,000 deposit for your kid if they were,
Yeah,
born in the next 3 years? Like that works really, really well on social media to get attention. So there's a lot of things here that can really be turned into great communication pieces.
totally.
Yeah, and just to make it more confusing on the 529, I think you're allowed to make these larger distributions from accounts now, but the 10 to $20,000 limit goes up in 26. The other right, so this is again like these are details that you have to check into if you're going to actually suggest this to your client and work them through it. But if you're just highlighting, hey, did you know you can do more with your 529 account? That's a
Right.
great piece, right? And then
Yeah,
let's
and
figure out
we
the
will.
details later.
I think I've got that as a October do it for me social post. That and the child account, which I thought was sort of interesting. So
Yeah.
you sign up for
100%.
do it for me now, you'll get that content. Quick clarifying question, because I think we're going back and forth on this. Are living expenses like apartments and dorms and or room and boarding? I think we've been using our 529 to pay for those.
So you hope so.
Let's hope it's okay. Is that
Yeah,
that's
uh,
covered, right?
yeah. So that would have been in the earlier, and to be quite honest, I would have to look that up. There's something that's telling me there's some limit on room and board on food, but maybe not
Oh,
on
maybe not food. I think it's
room.
room.
Yeah, I think it's
Yeah.
actual, like if the campus gives you the bill for the
Yeah.
dorm.
Again, these are all things that like I have to look them up. I don't
Yeah.
have like all the other
And
thing.
again, I think that's the whole point of
That's the
Yeah.
where the
point, right?
opportunity lies. Yeah.
And I don't think that a ton of CPAs, if you're working on this with those folks, like these are really helpful, right? So here's what I'll tell you has been really helpful and beneficial for me because it takes time to digest any new tax rules and especially something as comprehensive as the ABA, even though so many things, there's this viewpoint like, oh, this was just an extension of the TCJA. I would argue
No,
with that. I think
And I wouldn't
there's
market it that way, by the way. Anyone listening,
no.
not
right, right.
market it that way.
But yeah, and I wouldn't. You talk to CPAs, they're like, well, it's really just an extension, and then you start going through like, well, what about
No.
AMT, the phase outs, the 1202, like all these things. Anyway, point being, the sorry, I
There's
lost my
just
train of
there's a
thought.
lot here
There's a
and
lot there.
a
Oh, sorry,
great
that's right.
opportunity.
As you're
Um,
digesting, what's really beneficial is what I've seen is really beneficial for me as a practitioner who's trying to digest all these rules is like these little hits. So it's like, I see something on the phase outs of the green energy stuff, right? Because those phase outs are all over the
yeah.
place. Some of them end September 30th, some of them end December 31st, some of them don't end into next year. What are those? Like, how long can you go and, still get a credit for a new EV or like whatever you're doing?
So actionable tips for everybody here. I think everybody is excited to get this content kit. And hopefully, if you're interested in having support to have content written for you on a continuous basis on this bill and lots of other topics, if you're interested or if you missed the poll, you can use the QR code. Clearly, there is just a, you know, a lot to digest, a lot that still is even being sort of figured out. And we're going to be on top of it. But I think this kit hopefully will be worth the time that you spent on this call. And Clint, we thank you so much for your expertise, and you bring such a fun light to it as well. And our apologies, I really do apologize that we didn't have a more structured and slides to go with some of the more technical aspects. So
But
thank you
that's what
for
we're
sharing
giving
with
you.
us. Yeah. So we're not perfect, but we love your engagement. We are so glad you joined, Clint. We're so glad you joined.
Thanks for
And
having me.
we'll send this out tomorrow, probably worst case on Friday. So everybody who has asked will get all of those resources, and we'd love to get your feedback once you see them. So feel
And
free to
once you,
send us
and
back.
if you sign up with FMG ongoing, we will have lots of social posts, blog posts, and emails for you around this that will go well beyond the toolkit. So you can use the QR code if you want to learn more, whether you're a current customer looking to upgrade to the Do It For Me program or someone brand new.
Awesome. Thank you, Clint. And thanks,
Thank
Sam,
you.
as
Thanks a
always.
lot.
Thank you all to our audience. Thanks for your time.
Bye, everybody.